as far as tracking all other sectors is concerned, and especially small cap, mid cap, Suyash, they have rallied far ahead of the broader markets, but that rally seemed to be now tempering in a way.
Shweta, yesterday we saw one of the worst falls in recent times in the mid cap and the small cap indices, and analysts, at least from what I am reading, are expecting that at least in the very short term, the trend may have turned bearish in the segment. Now, we did some number crunching this morning, and we also looked at the valuations. Now, if you can have the valuations chart on the screen, please. So currently Nifty is trading at a 1 year forward PE of about 20.3x, which is slightly ahead of its 10-year average of about 18x. Now look at mid cap, Shweta, 25.2x or PE it's at current levels, whereas 10-year average is about 20.1x. Now bear in mind these are not bubble kind of levels. They are, although significantly ahead of the 10-year average. Even in the small cap space, we can see the current PE, 1 year forward PE, stands at about 20x, whereas historically in the last 10 years it was about 16.6x. Now I included Nifty Bank in the space because it's one of the sectors that are actually trading at a discount to its historical valuations. Now in the last 10 years, Nifty Bank has had a PE of about 16x, whereas currently it has a PE, 1 year forward PE of about 14.2%. Now since the point is the Nifty Bank at least currently seems undervalued, and Nifty and the banking and the financial stocks, they attribute about 38% of the entire Nifty basket. So is there a point is there a case that banking stocks will perhaps drive Nifty to higher levels, at least in the near term or in a mid term, sir?
Well, Suyash, if I got the gist of your question, you were asking if the bank nifty can propel the broader markets to higher levels in the near term. Am I right in
Yes, sir.
assuming?
Yeah, yes, given that they
Or
have been underperformers lately.
right. So, our in-house studies that we conduct based on statistical beta, which is pure volatility, and alpha, which is absolute returns. So, your bank nifty has underperformed the Nifty 50 on 5 weeks, 10 weeks, and 20-week time frame. As a matter of fact, over the 10-week period, you have rankly underperformed the Nifty 50. And let's not forget, the weightage of banking and financial sector services in the Nifty is in excess of 35%. So you say out of three engines in an aircraft, one engine is underperforming or is underpowered, which is why the Nifty is at 20,000 odd levels and not 20,500 or 21,000. It is purely because banking and financial sector services have been lagging behind. And this is not really a surprise. It's not rocket science. You have cost of funds, which is coupon rates, which are going up. Now, we all know that easy and ample supply of money at low interest rates is mother's milk to a bull market. Now, when interest rates start to go up, money taps tend to tighten, and interest rate sensitives, banks and financial sector companies are interest rate sensitives. So, take for example a bank or an NBFC. Money is both a raw material and a finished product because it borrows from the depositor and lends it to a borrower. So, when the cost of money is going up, the raw material and the finished product must get expensive, which is why this sector is underperforming. Now, one of the two things must happen. Either the Nifty comes down to a level where both Nifty and Bank Nifty start to give you similar return on investment, or the Bank Nifty moves up and plays catch up with the Nifty 50's return on a 5, 10, and 20-week return on investment basis. Currently, what I told you earlier, change of ownership, weaker hands getting out, stronger hands getting in, is in process. So, in the absolute near term, there is a possibility that the Nifty might cool down. I'm not saying it will fall. It could go sideways with the Bank Nifty moving up a little. There might be consolidation and a cooling off in the Nifty, but over a period of time, if you take a look at it from a long term perspective, both will start to move in tandem, where the Nifty and the Bank Nifty will start giving you similar results. So, 3 to 4 months down the line, I think a Bank Nifty should be in a better place than where it is right now in relative comparison to the Nifty 50. I'm not saying absolute, I'm saying relative comparison.
Sir, what's your opinion about the mid cap and the small cap space? We have seen them; they have run fervently in the last, since the start of the financial year 2024. They are up about 30 to 40%. Now, from what I'm reading, at least many experts are saying that large caps can play a catch up. But what's your opinion about mid cap and the small cap stocks? Is it a hurdle? What's the long term story, sir?
Well, I've been in this market since 1986, and what I have seen from mid cap and small cap spaces that in a good market, in a bull market, and everybody loves a bull market, right? These stocks tend to be multi-baggers. But that's only part of the story. What happens during bearish phases? I'm not saying bear market, I'm saying bearish phases. In a bearish phase, these stocks can halve or even fall further. So what is 100 can become 50 or even 25. In a bear market, they could go even lower. I've seen stocks become penny stocks and then go up to triple digits. So, as long as there is a retail segment in the market, and retail investors and traders love buying shares cheap. By cheap, I mean low price. As long as there is retail space in the market area, market universe, mid cap and small caps will always find buyers. But you need to understand that you are either going to see your capital double, triple, or go up more, or you're going to see it come down by half or even less. So it's a feast and funeral segment. You need to be very strong in the gut to be able to take this kind of volatility, and you need to be extremely patient. I think people who are looking to get rich quick are people who are latching on to momentum. Just because the stock is moving up on 3 or 5 day basis continuously, they assume that the sixth day will also be a bullish one, and therefore let's buy in the morning only to get out in the afternoon. That logic does not work.